the story. Well, let's go ahead and get the market conversation going with George Thomas, fund manager at Quantum AMC. George, good morning. Great to have you with us, and thank you for joining in. I know you won't get into individual stocks, but I just want to get your sense on, because this Paytm issue has become a big market event as well in terms of how some of these, new banks or neo banks or fintechs, how they're looking to expand their business, and then some of the regulatory hurdles that come along the way. What have you made of what has happened? And what is going to be your takeaway when you look at your financial sector exposure to non-lenders?
Yeah, thanks for having me on the show. So when we look at a lot of these recent business models, in many of the cases, it's a winner takes all kind of scenario. So either you become extremely successful, or you end up being a marginal player or in that space. So the challenge for us in many of these business models has been, one, the cash flows have been too far out in the future. And when you value those companies, it's very difficult to justify in a value portfolio kind of thing. But in many cases, the business models are still evolving. And in a few of these cases, there is an extra layer of regulatory overhang. So we would rather stay away from such names for quite some time. At least, they reach a reasonable certainty in terms of, how their business models would evolve.
Okay, so I'm guessing you don't have any exposure across any of your portfolios, any of the funds to Paytm. Is that right?
Yeah, we don't have any exposure.
Okay, all right. I suppose that your investors right now would be, quite relieved with the call that you've taken, but that's the way things have gone and the market has gone. Let's just, go beyond it now, talk about, regular financials as well. What is the stance that you've taken on large cap banks after this earnings season?
So we are quite positive on the large cap banks, especially the private banks. So especially, in the current environment, private banks is one of the few spaces where there is at least, some upside comfort, at least from the valuation perspective. Our sense is, even the way the budget has come out, our sense is liquidity could ease in the system as yields come down and, the government takes a path of fiscal consolidation. So our sense is the current overhang of lower deposit growth versus credit growth, that could see some relief at some portion of the next year. And therefore, we are quite positive on the bank side. One, of course, the credit cycle and the credit cost would remain benign. And there could be deposit growth picking up to support some of those credit offerings.
Y'all, the Quant Mutual Fund has a fairly high exposure to HDFC Bank, I think close to about 9%. Did you all use this opportunity, the decline that we've seen in HDFC Bank share price, to top up?
See, I won't be able to give specific comments, but of course, the mentioned name remains a large weight for us. And we are almost, near full allocation in the name which you mentioned.
Any big surprises, positive or negative, in the earnings season because of which you changed your either the call or rating on a particular stock sector, or changed your allocation that you have in your portfolio?
See, as I said, we remain constructive on private banks, and that continues to be our largest position. But of course, we generally tend to take a 2-year horizon while deciding our investment decision. So from a 2-year perspective, there is nothing concerning in any of those large private banks. There could be some short-term volatility depending on how those deposit run rates kind of picks up and stuff. And even on a whole system level, the liquidity was kind of low. But we don't feel that's a permanent phenomena. But at least 2-3 quarters down the line, we should see some change there.
Okay, so, that's the takeaway on financials. George, what else? What else are you liking in a market which is now, tracking close to all-time highs? Tell us about your other top ideas and top themes beyond large banks.
All right. So if I look at from a sectoral perspective, in most of the sectors, there is very little upside left. So at least from an investor perspective, it's better to keep some dry powder at this point. But you'd have to go bottom up and see, that there are names which had some bit of problems in the last 1-2 years, and some of which are cyclical, and investors can invest in some of the names which are coming out of that. So the recent addition has been a savings related theme in one of the life insurance company, where they have been facing some challenge in terms of their largest channel partner. And they have kind of diversified their channel mix, and we are hopeful, at some point in the next few quarters, we could see the channel share kind of bottoming out and growth kind of picking up. So that was one addition. The other recent addition was a cement player focused on East. Again, our sense was in that there is reasonable scope for good deleveraging and cost kind of bottoming out, and some support for profitability coming out from those favorable cost dynamics. So it has to be bottom up, and from a sectoral theme, there is other than banking and financials, there is nothing which looks quite attractive from an overall sector perspective.
Okay, George, we'll leave the conversation here for now. Thank you very much for joining in. On the other side of this break, we'll get you excerpts from our conversation with the management of Motherson Sumi Wiring post their Q3 numbers.